things of this new law that's come into place. I would say one, there's now what we call fairness and proportionality. Until some years ago, Nigeria, we graduated our tax payable from zero rate. We then have zero, 20, and 30% rates. If you are a business of 25 million, you will not be paying any taxes, I mean corporate taxes. So, but looking at it logically, we did realize that while 25 million would be a lot of money for some businesses, it is also quite small for the kind of people that should be exempted. So what the law has done now is that it has increased the band. So from before it used to be a 25 million threshold to pay taxes, now it's about 100 million. So if your revenue threshold is from 100, it's from 0 to 100, you'll be exempted from taxes. You're practically paying zero taxes. You're required to file your returns, but you'll be paying zero taxes, which is absolutely welcome because it means a lot of businesses, the typical small and medium businesses will fall into this category. So they can continue to run the businesses, but they will not be paying income taxes, which is logical. We also have the same thing similar for personal income tax. We do see that a lot of Madam Chairman said it the other time that I'm wondering what will 500,000 do for house rent. I absolutely agree with her. But the fact is that if you look at the threshold based on the modeling we've been able to do in my organization, we realize that a lot of the low income earners, 1 million, 2 million, even to a lot of threshold of people earning up to 7 million, up to 20 million, their monthly income taxes reduced. It's only when you start crossing the band of 21 million naira per month that your income tax is expected to increase. So for a lot of household, this means that no matter how immaterial it could be, 20,000, 5,000, 10,000, there's a lot of more disposable income in every household because a lot of people are beginning to fall under the low income in Nigeria. If you look at the economic parameters, Nigerian economy right now, it is being dominated primarily by the small and medium businesses and the low income earners. So trying to reduce taxes or exempt some classified people from taxes actually shows how the thinking of the government. So I will then move to the next one. One of the benefits is some organization now is going to take benefits of what we call tax exemption. If you're in a particular category, we've got the party now. We used to have what we call pioneer. But if you look at that pioneer, we did see that some organizations call themselves pioneer business, but they were operating in pioneer and selling to Nigeria. The whole idea of pioneer is that you should produce at that period and you're exempted from taxes for that period of time. But people started abusing it. You see some people, they will suddenly, they will have a line of business that is exempted from pioneer. They will improve just something simple and go request another pioneer. So the whole idea of pioneer has now changed to what we call EDI, economic development investment. So now there are just about 12 sectors that can enjoy what we call EDI. It's not for everybody any longer. And what this is trying to do is to bring in a balance such that everybody's paying. Because imagine you're in pioneer. When you're a partner, you're not paying any taxes. And then you are taking the advantage in a very uncompetitive manner. So the government wants everybody to be competitive. And that takes us to the free trade zone. So typically in Nigeria, what we call free trade zone is that when you are in a zone, you are not to pay taxes for what you produce in that zone, but you are expected to export that material, whatever you produce outside the country. Over the years, we then realized that people are beginning to produce in the free trade zone and selling to Nigeria. So imagine you are selling to Nigeria from a free trade zone where you've never paid custom duties, you've never paid taxes, you've never paid anything. Automatically, by virtue of that, you're already in an advantageous position compared to somebody operating a typical custom territory in Nigeria. So the free trade zone modality has totally changed to make things happen. The law generally now is in favor of a lot of taxpayers. You can then right before it used to be very difficult to get tax refund. even though right now the modality of tax reform has not really been published, the guidelines, based on the law, the Nigerian Tax Act, everybody can request a refund between a 30 days to a 12-month period on transaction. That means if you're in a business that you're not supposed to pay VAT, for instance, but you charge VAT, you can always request for a refund. And that's something positive. We're moving to the laws are better, are clearer now, which is really important for us because you cannot advise a client if the laws are not so clear for you. Okay, so I would then move to, as consultants, as chartered accountants, as people that have practices, what are the things we need to be aware of, and what are some of the concerns that we all need to be aware of? Okay, uh, when I started this conversation, I started with a lot of information, what we call information overload. You go to Facebook, Twitter, everybody has different interpretation of the law without necessarily knowing how the law will work. I remember sometimes ago on Twitter, somebody said that, oh, the government is there. When you sell something, the government will automatically take 25% of your revenue, not even profit. Somebody said all their taxes will be paid, they will not have salary to take home. Then January came and everybody had to pay payee. When everybody paid payee, they realized that for a lot of people, their income taxes reduced that month. And everybody was like, wait, this is not what they communicated to us. So it means people are beginning to realize it. So there's just so many information in the public that people are beginning to see what is correct and is difficult. So our role as professionals now is to continue to engage the society, the populace, on the positive aspects of the law, on the law generally. And that means as practitioners working in companies as chartered accountants, as accountants, or having our practice, is an opportunity for us to talk to our company board, to talk to our clients, telling them what they need to do immediately so that they can do what is right. In terms of the government, there has been so much delay in terms of guidance. So there's just so many things not going right because when the law is released, everybody was expecting guideline. We heard, I don't know whether we heard about the chairman of the board of a committee of this reform saying that the guidelines were ready. They were just waiting for some things, some clarification before releasing. So that guideline needs to be released. One major issue we are having now is implementation. So I'll give you a very practical example from where we stand. When the law came into force, right, we all thought that the law was not going to apply retrospectively, that is not going to apply to past year, which for instance, 2025, and that was what everybody thought, which makes sense. Then suddenly, 2 weeks ago, the Nigeria Revenue Service now, which used to be FRS, released what we called a guideline. And we also saw some of their internal memos saying that the law is going to apply to companies' financial statement for 2025. This has caused a lot of pandemonium in the industry right now. Some companies are beginning to ask themselves, asking us, we should advise on should they be taking the case to the court. So these are unnecessary, going to the court when the law could have been really clarified. So the implementation dates of this law is a major thing. And some of us, our clients, our companies will be asking us, what do we advise? So we need to be know how that. So, hello, can we still hear me, please?
Please go ahead.
Okay, yeah. So this is going to be the last slide I'll be presenting.
Begin to round up.
Yeah, this is the last slide for the I'm presenting. So this part is talking to us as consultants that have clients, as talking to us as company chartered accountants. What do we need to do to be ready for this tax reform? Internally, my advice is that we should go keep our house in order. What do I mean by keep our house in order? Right now, go and do what we call tax risk assessments. Go to the past, 3, 4, 5 years ago, or what we call tax open years that has not been audited by a tax authority, and immediately do a review to say, do you have exposures? If you have exposures, what are the strategies for you to manage those exposures? Immediately start managing it. Engage FIS to say you want to do voluntary disclosure so that you can negotiate waiver of interest and penalty, or instead of you pay at one lump sum, they're able to negotiate it for you. And also going forward, because this is a new tax law, there will be lots of interpretation coming in every day. I would advise that every quarter or every biannually, we are doing what we call risk assessments, just to see that we are doing everything in line with the law, you cross-check and cross your consultant, chartered accountant, and everybody to ensure you're right. And that takes us to what we call impact assessment. So right now, if you have some clients or as a company, you need to check yourself to say, you already have a strategy for, let's say, 3-5 years. You have your revenue strategy, you have everything. You need to review to say, when I was preparing my strategy 2 years ago, I was preparing based on the current law. Law has changed now. What are the things I need to check? As my tax rates increase, as it reduce, does it increase my power to be able to raise funds? Will my investors be worried? Will it affect the dividend I'm able to declare? So we need to start checking the impact assessment and start getting ready so that we are able to, our business is positioned to take advantage of the old tax law and not that we are going to be surprised. Also, chartered accountants, one thing, which is what we are currently doing now, is capacity building. We need to continue to read, we need to continue to engage fellow professionals so that we always have the knowledge and we're always on top of our game. Importantly, we also need to strengthen our internal controls. I can tell you for free that the tax authority, they've invested and they're investing a lot in infrastructure. When I mean infrastructure, I'm talking about human capacity. I'm talking about IT, intellectual
Please
property, and
round up.
everything. And this gives
Please
them
round up.
access.
Please round up.
And this gives them access. Okay, and this gives them access to be able to review everything. So those are some of the things that I felt is important for us to take note of as we continue to operate in Nigeria and live in this new tax era that has surprised a lot of people. So thank you for having me, and I appreciate the opportunity.
Thank you very much, Mr. Adesomi Adigari.
Yes, sir.
We have learned a lot from your brief presentation. You talk about the fact that the intention of government now is to bring in more people than previously. And you also talk about that SMEs with turnover of less than 100 million are no longer expected to pay taxes. And that we
Yeah.
have a duty to enlighten the clients and public. And that, in the past, pioneer status was, abused. And because of that, it has not been streamlined. And you also
Yeah.
talk about the intention of government is to make people have more disposable income than previously. And you advise us to put our house in order. We want to thank you for that brilliant
Yes, sir.
presentation.
Thank you, sir.
The second speaker, Dr. Kendi Odusi, is the director, Medium Tax Department, Nigeria Revenue Service. The topic of his discourse is compliance expectations under the new tax regime, enforcement and penalties, and risk management. I like to call on Mr. Alimo Yakubu to read his brief profile. Is Mr. Alimo Yakubu there? Hello, Mr. Salimo Yakubu. If he's not there, can Mr. Ademola Sunday read the profile?
Yeah. Yes.
Please read the profile of Dr. Kendi Odusi.
Yeah. Yes, I can. Let me read the profile of our doctor. Okay, are you there? Okay, sir. Dr. Kendi Odusin was born over 5 decades ago and hails from Ado Odota, local government area of Ogun State. He is a director in the Medium Taxpayer Department, Lagos, with the Nigerian Revenue Service. He holds various roles that have leveraged his expertise in technology. Leverage his expertise in technology with tax operations, tax audits, and other tax-related matters, while reflecting his significant roles in shaping Nigerian tax administration and policy framework. Dr. Kehinde Odusin holds a PhD degree in business administration and a fellow of the Institute of Chartered Accountants of Nigeria. Also fellow of the Chartered Institute of Taxation, Nigeria Associate Chartered Institute of Stockbrokers, and of course, holds certification in artificial intelligence and cybersecurity. He is happily married with children. My chairman, professional colleagues, ladies and gentlemen, join me to welcome our resource person, Dr. Kehinde Odusin. Thank you, sir.
Thank you very much, Mr. Ademola Sunday. Dr. Kehinde Odusin, you have the floor. You have to speak for 15 minutes. Thank you very much.
Okay, thank you very much. To say good afternoon. The chairman, the executive committee members, the tax chairman, elders, my colleagues, ladies and gentlemen. Within the 15 minutes, I should be able to round up the topic, compliance expectation under the new tax regime, enforcement, penalty, and risk management. It's no longer news. Talking about the Nigerian Tax Reform Act 2025. As we all know that it was passed into law 26 June 2025, and it became effective and implementation 4th January 2026. So it's no longer news. Basically, the Tax Reform Act contains about 4 acts. And these include the Nigerian Tax Act, the Nigerian Tax Administration Act, Nigerian Revenue Service Act, and the Joint Revenue Board Establishment Act. I don't need to go through this, what they entails. We have been reading this and listening to this since last year, about 7 months ago. Mr. Adejare talks about the objective. I don't need to go through the objectives again. But my job today is as an administrator to delve into compliance expectation. As we all know that Nigerian Tax Administration Act is set out compliance requirements in various sections of the law, particularly that covers all taxable persons, be it the MDAs, the non-residents, those in the informal sector. And this deals with registration, filing of return, identification, and others. What is this trying to achieve? Compliance requirement is just to support the accountability, transparency, and make Nigerian tax system effective. What are the key provisions? There are various key provisions that are in the Nigerian Tax Administration Act. It is expected as a taxable person in Nigeria to register as a business and get an tax ID, what we call tax identification. It is not only limited to those entities we call sole traders or companies, including the MDAs and the non-residents. Everybody is expected to have tax identification number. But beside that, under section 4, as I've just said now, other section also dealt with if you have the tax identification number, you are to state all this in any of your correspondence or documents, and as long as you're in business. And beside that, this tax identification number will also serve as a condition for any taxable person entering into contract with ministry, departments, and agencies. Though it's a condition for all banks, stockbrokers, that before dealing with anybody, the person must provide tax identification number. So that is number one compliance expectation. 2, notification of changes of particulars. Whether there's a change in name of business, whether there's a change in address, you must notify. That you'll find that under section 9. And when there is a suspension or deregistration or cancellation of ID, it is expected that within 30 days, taxpayer must write to respective tax authority. Section 11, 12, 13, 14, and 22. You see filing compliance under these sections. Tax compliance as regard income tax, individual, which is you call direct assessment, and a payee, which is expected of employer to remit, and that of withholding. Also, those in the informal sector, they are also charged under section 14, to render returns. I'm sure whoever that's going to present on from state will be able to delve much on that area. Section 22 is value-added tax return. It is mandatory. Every 24th of the subsequent month, it is expected that taxpayer must file their tax return. Physicalization, or what we call digitalization requirement now. NRS started with the large tax last year. Now, already a public notice has also been sent to those in the medium and the emerging taxpayer. By March this year, they are commencing that of medium, so that by July, good to go. For surcharge, which is a tax on fossil fuel, excuse me, on fossil fuel, though not yet the implementation, but you see this under section 159 of Nigerian Tax Act. Return on virtual assets, which is referred to as FACP. It is expected that all the companies, whether you are into management or exchange, you are to render returns, under this section. Therefore, priority companies, it is expected that the companies that we refer to as priority companies, as referred by Mr. Adijere, which we know as pioneer taxpayers. These, in addition to their normal returns, they are to file return for both priority product and non-priority. For those in the export processing zone, it is expected, in addition to their income tax returns, to file tax incentives return. For those that have related transaction, it is expected under section 192 of NTA to file, NTA to file what is known as transfer pricing. Also, I've just mentioned at the beginning of a filing of returns, a deduction at source under Section 28. You will see that where you are expected to file your withholding tax return. Bankers now, it is not a new, let me put it that way, because bankers in the past, they have been submitting returns to tax authority. So all financial institutions, both the traditional and the fintech, they are required to deliver returns at end of each quarter to tax authority. And particularly under Section 30, which I also want us to take note of. Any taxable person that intend or enter into any transaction agreement for purpose of tax planning, they have to file, returns to the tax authority. Why record keeping is a must. All companies, all taxable persons are required to keep and maintain accurate books. Now, for enforcement, Part 3 of the Nigerian Tax Administration Act set out both the legal tools and powers given to tax authority. There are many ways where a taxpayer who is showing non-compliance, how to actually enforce such taxpayer. These particular enforcement mechanisms, it covers how taxes, if there are criminal issue, how to be investigated, it covers how to recover, how to seize a property and impose penalty. Dealing with enforcement mechanism, audit and investigation under Section 36 and 64. 36 deal with tax audit, while 64 deals with tax investigation. These are mechanisms that are provided in the Act to enforce non-compliance. And when you go to Section 57, Section 67, 57 deals with notices and summons. Under the new Act now, it is very important that we must take this particular section very well, because where taxpayer refuses or delay in addressing notices and summons from the revenue, it becomes an issue, and an administrative assessment will be issued to that respect. Now, like I talk about, banks are to render returns. Those returns that they render to FRS, we have a robust department now that analyze those data and share with various offices for those that are non-compliant or for those that are under-remitted, their financial statements. In fact, we need to take this place very, very important under that Section 71. Another mechanism that tax authority can also employ is a true legal action and assets recovery. With the Federal High Court, when there are issues with the Nigerian Revenue Service, don't need to get a court order before they can place a lien on such account. And then there's also an avenue with the introduction of this act to approach tax ombudsman, just like we have the TAT in the past, if you have any tax disputes. We've talked about disclosure of tax planning and disregard to artificial intelligence. Then the next thing.
Please begin to round up, Dr.
Okay, sir, thank you. Again, we also have a mechanism of joint audit, which has never happened in the past, but I want to say that under this new act, there will be joint audit between the state internal revenue and Nigerian Revenue Service. There are a lot of powers that you see entrenched in the Nigerian Tax Administration Act. You have seen Section 57, call for return, power to assess, power to remove, and so on and so forth. Now, let me quickly address the issue of penalty for non-compliance. This you can find this under Part 1, Chapter 4, which outline an extensive range of penalties. Basically, this penalty, they are of two categories. We have the administrative, and we have penalty on conviction, for conviction. You will see that general penalties under Section 100 to 127. These are also detailed in the slide as appear. Failure to register, failure to file returns, failure to grant access for deployment of technology under fiscalization, or failure to keep proper books. So we also have failure to make attribution. There are so many penalties, that are here, but depending on the gravity, whether it should come in form of administrative or it should go to court. Let me quickly. So here, both in Chapter 2 and Part 2 and Part 3, I did not touch this because you will find it under petroleum operation and Part 3 under surcharge. And that you can find that under Section 128 to 137 of NTAA. What are the risk areas that we have to be careful, particularly with the implementation of this Nigerian Tax Act, Nigerian Tax Administration? Now, for underreporting, like I said, Nigerian Revenue Service also have a robust data. What has never happened in the past, where there's a tool called transactional monitoring system now, that the way the transaction occurs, we can track that transaction. So we have to be careful under reporting and inaccurate return. Then
track tax level track.
Okay, thank you. Poor record keeping, non-adoption of digital system, like I've talked about it. Then when you engage in cross-border or transfer pricing, it's a high-risk area. Then withholding tax, remittance risk is also. How do we address all these common risk areas? One, build a strong internal control in your organization. We need to recalibrate existing internal control measure across all functions to align with the Tax Reform Act. There is a need to carry out a regular compliance audit, engage tax or accounting professionals that can help to regularize compliance audit. Also, strategic adoption of digital system. Now that fiscalization is in the provision of the Act, it is good that the taxpayer embrace technology, and both in accounting and tax. Then for cross-border, ensure that where you have related party transaction, that you file under this new rule, you file your transfer pricing return. Then invest in staff development. It is important that as we are going, there's a need for organization to invest in capacity building. In conclusion, the compliance framework, we don't see it as a punitive. It's just a way to help to strengthen our internal control processes and improve record keeping, and then to build, or to align with the world standard. Ultimately, the success of this regime depends on partnership between the government, taxpayer, working together to ensure compliance, stability, and sustainable Nigerian economic growth. Thank you very much.
Thank you very much, Dr. Odusi, for that wonderful presentation. You walk us through the registration, filing of returns process. You talked about key provisions, register and get tax ID, including MDA and non-resident. Then notification of changes of particulars. You also talked about section 14 for those businesses in the informal sector of the economy, now to render returns. You talk about enforcement compliance. Then you also talk about priority companies that they are expected to file returns for both priority and non-priority businesses. Then filing by those engaging in transfer pricing. Then you encourage every one of us to keep records, and you talk about joint audit between state and federal government, which is collaboration. That collaboration is long overdue. We have been talking about it, so it's good that you're embracing that. And you talk about risk areas on how we can navigate the risk areas. So thank you very much. I know people will definitely ask you questions at the right time. Thank you.
Thank you, sir.
The third paper, the speaker is Mr. Jones Oluwarotimi, FC, Tax Controller, Nigeria Revenue Service, Yaba Emerging Tax Office, Lagos. And the topic is emerging taxes under Nigeria's new tax laws, scope, administration, and early signals. I like to call on Mr. Oyinlola Kehinde to read his profile. Is Mr. Oyinlola Kehinde there? If it's not there, Mr. Ademola Sunday,
Okay, sir.
please read the paper.
Maybe
the
network
profile.
have login out. Let me stand to read the profile of our resource person, Mr. Jones Oluwarotimi. Mr. Jones Oluwarotimi, FCA, FCTI, ACS, FCE, FIMC. Mr. Jones is an accomplished chartered accountant, seasoned tax administrator, an award-winning revenue strategist with the Nigerian Revenue Service, NRS. With over 13 years of impactful public service, he has distinguished himself through exceptional leadership, operational excellence, and sustained revenue growth across strategic tax jurisdictions. His career trajectory within the NRS reflects progressive responsibility and measurable impact. He has served in key operational and leadership roles, including Head of Monitoring and Compliance, Lagos Mainland East, LME, Regional Office, Commissioner for Stamp Duty, Lagos Island, March 26 to April 24, Team Lead, Non-Oil Financial Sector, Large Tax Office, May 2024 April to April 2025. Currently, is the Tax Controller hereby Emerging Taxpayer Office, ETO jurisdiction. During his tenure as Commissioner for Stamp Duty Lagos Island, the office experienced a remarkable transformation in performance. In 2021, the office achieved an extraordinary 398% of its annual tax collection target, earning the prestigious NRS Tax Office of the Year award. The momentum continued in 2023 when the office attained 155% of its collection target, securing the NRS Field Office Award. In his current role as Tax Controller of Yaba Emerging Taxpayer Office, Mr. Oluwarotimi has sustained his performance-driven leadership approach. Under his stewardship, the office met and surpassed its annual revenue target by September 2025. Any commendation and recommendation for excellent performance from the Emerging Taxpayer Department, ETD Lagos. In recognition of his depth of knowledge and technical competence in taxation, he was selected as facilitator at the NRS Training School, Agidimbi, Lagos, where it trained preliminary inspectors of taxes, PIT, contributing to capacity building within the service. Academically, he academically distinguished. Mr. Oluwarotimi holds a first-class honor degree in accounting. He's a fellow of the Institute of Chartered Accountants of Nigeria and a fellow of Chartered Institute of Taxation of Nigeria, alongside several other academics and professional certifications. Beyond his professional achievement, he's a committed family man, a man of God, and happily married and blessed with children. My professional colleagues, my chairman, ladies and gentlemen, join me to welcome to the call Mr. Oluwarotimi Jones, FCA, FCTI. Thank you, sir.
Thank you very much, Mr. Demola. Mr. Jones Oluwarotimi, FCA. So you have 15 minutes to deliver your paper. Thank you.
Okay. Thank you very much. Chairman of the session, moderator, co-speaker, the audience. My name is Jones Oluwarotimi once again. The topic before me is new and emerging taxes under the Nigerian Tax Act 2025. But I would like to say this before I start the presentation. When new development comes up, there'll be a polarized decisions, opinions from different directions. And webinar like this will go a long way to help in decentralizing enlightenment to the general public. But I want to say in a clear term that the tax reform is one of the best things that can happen to us in Nigeria. Because as you can see and trace it, critically we look at it that Nigerian tax system has been faced with a series of challenges in the time past. It has to do ranging from lack of policy consistency, fragmentation in tax administration, obsolete laws. But this tax reform has come to help in this direction. As we all know, taxes, they are creation of law. So this new tax reform has brought to fore new and emerging taxes under the Nigerian Tax Act. And I want us to know one thing very clear, that the objective of this NTA basically is to provide a unified fiscal legislation governing taxation in Nigeria. The slides that speak to my topic is what I will be talking about now. Yeah, introduction. You all know on the 26th of June 2025, President Bola Ahmed Tinubu signed into law 4 landmark tax reforms: Nigerian Tax Act, Nigerian Tax Administration Act, Nigerian Tax Administration Act, Nigerian Revenue Service Act, and Joint Revenue Board Act. Then the Nigerian Revenue Service Act and the Nigerian Joint Revenue Board Act came into effect immediately upon enactment on 26th of June 2025, while the NTA, the Nigerian Tax Act and the Nigerian Tax Administration Act came into effect the first day of January 2026. I will start my point from Nigerian companies under NTA, Nigerian Tax Act. Now, Nigerian companies under Nigerian Tax Act are categorized into two under sections 56. We have small companies and others. Deviation from what we have from the past. From the past, we have small companies, medium, and a large company. And then the small company and the middle company, their threshold is between 0 to 100 million turnover threshold. But the new tax act now put the small company threshold to be between 0 to 100 million, meaning that those companies under medium tax that were paying 20% in the past, that ranges between 25 million and 100 million, 20% company income tax, they will be exempted from paying tax now because they are now under small company. This is the beauty of this new tax reform. Now, and the small company will not at the same time pay any taxes, but they will file their return. And I want us to also know that under the new tax act, capital gain tax has been subsumed to company income tax. This implies that while you are filing your company income tax, alongside you file your chargeable gain tax at the rate of 30%. Before it was 10%. And let me quickly point this out too. To qualify as a small company, your total fixed assets must not exceed 250 million. Now, under the NTA, only expenses wholly and exclusively incurred in generating income are deductible, unlike the old law, which allowed deduction for expenses that were wholly, reasonable, exclusively, and necessarily incurred. And to say further, capital gain tax now will be based on preceding year basis because you are paying alongside with the CIT. Now, unlike what we have in the past, that will be on actual year basis, the capital gain tax will be an event-based taxes between the capital gain tax, the disposal of exchangeable assets. You have to file it during the year, June and December. And then I want us to also know further that this section 34 provides that exchangeable gain are now included in the company profit to enjoy capital allowance and to be then taxed 30%. It is worth to know that there's a treatment of capital loss now can only be offset against capital gain of the same type or class within the same year of assessment. And now also losses will be carried forward in the minimum tax has been discontinued. Under the new act now, capital allowance is on straight line basis. And then NTA also explicitly states that winnings, honoraria, grants, profits or gains from transactions in digital or virtual assets are chargeable to tax. However, losses incurred from transactions in digital assets will only be offset from the profit from the digital asset business. Now, there's effective tax rate. Section 57 of the Nigerian Tax Act introduced effective tax rate of 50% of the net income of the company. Net income refers to profit before tax, as reported in the audited financial statements, excluding bank investment income and unrealized gains and losses. This provision applies to companies that has a turnover of 50 billion and above, and a company that is a constituted entity of a multinational enterprise group with an aggregate group turnover of 750 million euro or its equivalent. Effective tax rate is covered taxes as a part of net income, that is tax paid by that company divided by the profit before tax. So it is worthy of note that covered taxes as a percentage of net income must not be less than 50%. That will make it effective tax rate. In the event that the tax paid is less than 15%, such company shall recompute and pay the additional tax that makes it up to that equal of 15%. This is to align with global best practices as recommended by OECD, the Organization for Economic Cooperation and Development. Now we have another new tax that emerges to is a development levy of 4%. The rate is 4% on accessible profit before deduction of loss. So they merge some taxes in the past together. They were merged. Police Trust Fund, Education Tax, NIDA, and NASENI. They were merged together. Then the special was 4.25%, but now it's 4% accessible profit. Now we have value-added tax. The rates still remain. I want to speak to emerging taxes. Now, because there are some reclassification under value-added tax that needs to be discussed. In the past, there are some items that were under VAT exempt. Now they've been reclassified under zero rated. This means that they can claim a VAT input. And here are the key items reclassified under zero rated in NTA 2025. We have the basic food item, medical and pharmaceutical products, educational books and materials, fertilizer, that is agricultural inputs, locally manufactured items, electricity, power supply to the national grid, medical services, that services rendered in the medical and pharmaceutical sectors. So the implication of this is that, as I've rightly said earlier, that business can now recover input VAT on taxable supplies, including input tax on services and fixed assets, provided that such supply are consumed, utilized, or supplied while making taxable supplies. Another thing I want us to know here now is that the new tax act and the Nigerian Tax Act enforces that non-resident company that is involved in taxable supply must register. We have TIN, and in its invoice, it has to include the VAT component. But failure to do this, the resident company in Nigeria will self-charge, as we have in the past. Now, VAT fiscalization. VAT fiscalization of supplies for VAT. That's section 157 of the NTA, where that it is mandatory for taxable person making taxable supply to implement the digital VAT fiscalization system deployed by the. Yeah, my Oga has really said this. He delved into this when he was discussing about the pilot rollout has been in the service. That started last year. But the implementation is based on a segment of our office that has to do with tax taxes, medium taxes, and emerging taxpayers. Now, under the lag taxes, the pilot rollout and go live have been completed. Now the implementation rollout for other phases that have to do with medium taxpayers and emerging taxpayers. They've already set out how it will be rolled out, and there's a time lag to achieve that. Now, on stamp duty happens to be the oldest form of taxes. And stamp duty in the past has series of obsolete laws. The way it's been structured is very difficult to understand. It's very archaic. But the new tax reform now has made it so simple. They've even reduced, they've collapsed many sections we have in the type as about 180 section to 19 section. But let me first define stamp duty. Stamp duty is a tax that is levied on instrument and debitable transactions. They are tax we pay to involve government in our private businesses, agreement, and contractual agreements. Stamp duty could either be fixed, ad valorem, or exempted. That is why you pay no duty. So you see detail of stamp duty in chapter 5 of NTA. And going further, the schedule, whereby you see the rates of stamp duty, there are a lot of new rates that have been introduced under the Stamp Duty Act. So let me quickly. So the new rate for stamp duty under the NTA are as follows. There is a new transfer of mineral asset. It's now 2%. It's an emerging tax or transfer of mineral assets. Under list 2 agreement, in the past, the graduating rate was between 0.78 to 6%. Now the 6% has been expunged. What we have now under NTA is the graduating rate is between 0 to 7 years, 0.78, and above 7 years is 3%. This is a very good development. It's a big relief for companies engaging in lease that is above 21 years that will have charged for 6% the time pass under the SDA. So under any agreement that has to do with usage of assets, under lease, conveyance, and mortgage, stamp duty applies to instrument valued at 10 million and above. Below 10 million, they are exempt. So there's conveyance now via mutual disposition, like in form of trade by barter. The rate still remains at 1.5%. Under the SDA, Insurance policies was based on policy value, but in the NTA now, it's based on what? Premium. So, and then they redefine conveyance under the NTA. Before conveyance, conveyance was defined under the SDA as any property, but now they have narrowed it to real property, land and building, or any immovable asset, of which when you remove it from the land, it will affect the structure of that land. Now, there's a new rate for marketable securities. Before it was 2.25%, very high, but now it's 0.225%. Now, counterpart copies now to meet with economic reality is no more 50 naira, it's now 500 naira. And then contracts other than ad valorem instruments is now 1,000 naira. And it has to relate with subject with a value that is less than 1 million. Now, under income of an individual, there are some new taxes too. So PIT under the NTA is a progressive tax, and it is more equitable and transparent. The higher you earn, the higher you pay. So the tax band is between 0 to 25%. Resident provide income, while non-residents are to be taxed on income generated from in Nigeria. So there are exceptions under income of individuals under the NTA to low-income earner, minimum wage earners, and members of the armed forces. There's this rent relief, as earlier speaker mentioned, of 20% of annual rent paid, subject to there's a cap of 500,000. Then there's this presumptive tax. Section 29 talk about presumptive tax under the NTA, provide that we are, for all practical purpose, the income of a person scheduled to tax cannot be ascertained, or where records are not kept in such a manner as to enable proper assessment of income. Such person shall be assessed on such terms and conditions as may be prescribed by the minister on the advice of Joint Revenue Board. So we are waiting for the regulation to come out so that we'll be able to monitor them effectively. So there are other benefits too under the income of an individual under the NTA. Yeah, fossil fuel charge. The Nigerian Tax Act newly introduced a fossil fuel charge. So such an environmental charge on fossil fuel activity to discourage pollution and support climate sustainability. So it's yet to commence, but the comment will be set by the Minister of Finance via official gazette. So the rate now, Section 158 set out the rate. It's a new rate, 12% such charge on chargeable fossil fuel products produced or provided in Nigeria and shall be collected at the time a chargeable transaction occurs. So the compensation shall be based on retail price, which Nigerian Revenue Service will collect with such as monthly. Exceptions that it will not affect the following. It will not apply to clean and renewable energy products such as household kerosene, cooking gas, and CNG, compressed natural gas. So now we have the free trade zone. Talk about second schedule, and somebody has joined us to this, I will still mention it. Second schedule of the NTA talks about this free trade zone. So export processing zone entity, an enterprise that is approved and licensed under the provision of the Nigerian export processing zone. The profit of an export processing zone are fully exempted from tax if they meet the following conditions. One, directly export of goods and services. Providing goods and services that serve as.
Please begin to round up.
Input, raw material component and services into other goods or services that are themselves exclusively for export. And then the amount they can sell, the anything must not sell more than 12% to the custom territory. If it's more than that, they will lose the full exemption. So if the entity exceeds the 12% threshold for the sales into Nigerian custom country, it loses the full exemption. So we should also note that profit of export processing zones shall be fully subject to tax effective from 1st January in respect of discretion to extend this.
Let's begin to round up.
10 years, commencing from the date of NTA. Then quickly, control foreign corporation rules are just newly introduced. This has to do to counter profit shifting. This has to do with a Nigerian company that is having foreign subsidiary, and that's of course very fair to distribute a retained profit that should be distributed. And if they distribute this profit, it will not affect the operation of that company. So now it will not be considered that those distributed profit will be added to the parent profit for tax purposes. So recommendation to stakeholder: understand your obligation, rights, and duties. Increase in compliance level, embrace record keeping and digital system, leverage on incentives and relief under NTA. Thank you very much for listening.
Thank you very much, the paper presenter, Mr. John Oluwarotimi. You walk us through the challenges of, the tax system necessitating these new tax laws, and you now made us to believe that only expenses directly incurred are now allowable. You talk about capital gains taxes, and that it is now on preceding year basis instead of actual year basis. We talk about the development levy of 4%, now introduced to take over some other taxes that were collected in the past. And that businesses can now claim all input VAT. You talk about stamp duties, and that it has not been streamlined. Then you talk about the income of individual. And you made mention of presumptive tax, where income cannot be asserted. You said the minister is going to come out with the regulations. I'm going to ask you a question about that later. Then you talk about free trade soon. We are grateful. Thank you very much for that wonderful paper presentation. We are going to the fourth paper. And the speaker is Mr. Joel Babatunde FC, Senior Partner TAS, Bekatili, Nigeria. It's going to talk on implications of the new tax laws for SMEs, risk relief, and tax planning opportunities. Is Mr. Alamunda? Hello?
He has
Is
been
Mr.
locked down,
Alamunda?
sir. He's not around.
He has been locked down.
Yes, sir.
Mr. Sunday, Mr. Sunday, Adibola, are you there?
All right, sir.
Please read the citation of Mr. Joel
Thank you,
Babatunde.
sir. Mr. Joel O. Babatunde, FCA, ACTI, BSc, Professional Qualification Fellow of the Institute of Chartered Accountants of Nigeria, ICANN, Association of the Chartered Institute of Taxation, CITM, graduate of accounting from Olabisi Olabanjo University of Galway. He has over 2 decades tax experience. He joined crowd known Chartered Accountant in 2008 and later moved to Bekatili, Nigeria Limited. Nigeria, not limited, Chartered Accountant in 2023. Today is the Senior Manager Tax, Bekatili, Nigeria. My chairman, professional colleagues, ladies and gentlemen, join me to welcome and call Mr. Joel O. Babatunde, FCA. Thank you, sir.
Thank you very much. Mr. Joel Babatunde, you have the floor. Your paper ends by 6 o'clock.
Thank you, sir. Thank you. Good evening, Mr. Chairman, moderator, ladies and gentlemen, my professional colleague. Within the next few minutes, I'll be dwelling on the benefits that Nigeria. Are we together, sir? Ma?
Please go on.
Can you hear me?
Yes, we can hear you.
Okay. All right. So, small and medium businesses, they are the backbone of Nigeria economy, and the government too recognizes this, and that's the reason, one of the reasons why these new tax law reforms, was introduced, which took effect 1st of January 2026. You agree with me that the small and medium businesses drive the growth of the economy, and the federal government recognizes this, and they came up with certain incentive to enable small and medium businesses, enterprises to thrive in Nigeria economy. So in a very brief way, I'll be talking about the benefits of this Nigeria tax law to small and medium enterprises in Nigeria. The introduction will not be read again. Virtually all my co-presenters have talked about the introduction, and I will go straight to the provisions of this new tax act, the Nigeria Tax Act, and Nigeria Tax Administration Act, SMEs. Nigeria Tax Act classifies companies as follows, based on their turnover threshold.
Hello. Your network is not strong over there.
At all.
Network is
Hello.
bad.
His network is fluctuating.
Okay, let's go to the fifth paper presentation. Maybe by the time before he finishes, we can have him back fully. Hello.
Okay, sir.
Are you with me?
We are with you,
Yes,
sir.
We are with you.
Let's go to the fifth paper presentation. The speaker is Mr. Adibo Wale FC, Chairman of your State Internal Revenue Service, to be represented by Mr. Lukman Adebayo Mustafa ACTI, Head Digital Economy Compliance Unit, Oyo State Internal Revenue Service. The topic is Payee and Personal Income Tax Administration under the New Tax Reform Act. I'd like to call on Mr. who is to read the introduction of the chairman. Let me call on Mr. Ademola to read the profile because the name of the person is not here. Mr. Ademola.
Yes, sir.
Mr. Ademola,
Yes, sir.
please read the profile of Mr. Adebowale Awako.
Yes, sir. He is unavoidably absent. We actually decided.
Speak up.
Okay. He is unavoidably absent, and we have to keep the profile because it's not on ground, sir. I don't know if we can read out of the representative, or because it's not
Okay.
enough. Yeah. Thank you, sir.
Okay. Read that of the representative.
Sorry.
Are you there, Mr. Ademola?
Yes, I'm trying to lay my hands on the truth. Sorry. Maybe.
Don't you have it?
I can't lay my hand on it at present.
Okay. Okay, thank you very much. Mr. Lukman Adebayo Mustafa, please accept our apology. Please, can you have the floor, please?
Yeah, thank you, sir. Can you hear me?
Yes, we can hear you loud and clear.
Yeah. Good afternoon. The district chairman, Ibadan District Society, ICANN Ibadan and District Society, the chairman of the session, executive members of the districts, fellows of the institute, distinguished members of ICANN, invited guests, ladies and gentlemen. Let me begin by conveying the warm regards and commendation of the executive chairman of Oyo State Internal Revenue Service, Mr. Olufemi Adebowale Awakan, who has delegated me to handle this topic. Can you hear me?
Yes, please go ahead.
Yes, we can hear you.
Mr. Awakan acknowledges the pivotal role of ICANN members continue to play in strengthening tax compliance, professional standards, and public trust within our tax system. Let me also say this from the outset. When we had a similar engagement with the NBA Ibadan branch, the topic we treated was tax compliance, the new sheriff in town, our lawyers ready. Repurposing the same topic for the chartered accountants, we can conclude that the question is almost unnecessary. You cannot ask whether ICANN members are ready, because if there is any professional group position at the heart of tax compliance, interpretation seeking and application, it is ICANN members. The real conversation is not whether you are ready, it is how we align, collaborate, and move together with clarity under the new tax regime. Today's session is therefore not just another webinar. It is part of a continuing ORS ICANN alignment process, one that several ICANN districts in Ibadan have also engaged us on, seeking clarity, shared understanding, and practical directions under the Nigerian Tax Reform Laws 2025. And that is exactly why I'm here, representing the Executive Chairman of your State Internal Revenue Service. I'm here today not just to explain the law, but to reduce the uncertainty, to eliminate gray areas, and to minimize disputes that usually arise from unaligned interpretation. Because in our experience, most personal income tax disagreements are always caused by fraud. They are caused by interpretation gap and weak documentation. And that is precisely what the Nigerian Tax Reform Law 2025 is designed to address. To move us from uncertainty to clarity, from dispute to alignment, and from suspicion to collaboration. So today, as we discuss pay as you earn and personal income tax administration under the new Nigerian Tax Reform Law 2025, I invite us to approach this session not just as a technical discussion, but as a joint effort to build a more predictable, fair, and efficient tax system for your state. Shall I proceed, ladies and gentlemen? I think Mr. Sunday will project the slide which I sent.
Yes, I'm sharing it now.
All right, thank you very much. From a policy standpoint, personal income tax remains a critical pillar of subnational revenue, and it operates through 4 key mechanisms: direct assessment for self-employed taxpayers, pay as you earn for workers on employment, withholding tax for vendors and service providers, and presumptive tax for the operators of the informal sector. But looking at the topic, payee and personal income tax, I will want to conclude that once pay as you earn is one of the mechanisms of personal income tax, I will take us through the perspective of your state internal revenue service and include pay as you earn as one of the components, but it will be extensively dealt with a bit other than the other mechanism, the direct assessment and withholding tax. Under the Nigerian Tax Act 2025, taxable income is broadly defined as all income, profit, or gain from all sources, including capital gains that has just been subsumed into income tax, whether personal or company income tax. The implication is simple. The question is not whether income is taxable, it is whether there is a legal basis to execute it and whether you can prove it. There are 3 major shifts we need to understand. 1, self-assessment is central. Personal income tax is no longer something the tax authority determines first. It is something the taxpayers must get right at source. 2, organizations and employers are primary tax deducting agents. It is a statutory responsibility with direct liability. Failure to deduct and remit exposes the business or organization and potentially responsible officers. And also, failure to file and include income from all sources also exposes individual taxpayer. 3, data will drive enforcement. With increasing integration of systems, tax ID linkage, payroll data, withholding tax data, and third-party information, the gap between what is earned and what is declared is becoming very visible. So the real question is, can taxpayer position be defended with evidence? So, and going to, okay, you have not been able to upload, to share the slide. Maybe let me look for it in my system. Yes. Direct assessment template is what is contained in the 3rd slide of my.
The slide is on, sir. We are sharing it.
Okay, thank you very much. I appreciate that. It's not yet on. This is not my slide.
These were the previous slides from previous speakers.
So I think I would like to continue. Because I have the slide. Okay.
Continue.
Yeah. As I mentioned earlier, direct assessment is one of the mechanisms of personal income tax collection, and the story is the same, except that I would like to touch some exceptional areas. Talk of capital allowance. This is one of the issues that usually cause disagreement between tax consultants, ICANN members inclusive, and ORS. And it's just to tell you that for us to recognize, this depreciation is not taxable. It is replaced by capital allowance. But for a taxpayer to be qualified for capital allowance, the asset must be owned and qualify and be a qualified capital asset that is used for business during the period, properly documented, lawfully allowed, and correctly claimed in the tax returns. Otherwise, claim will fail. And the other side is those expenses that we usually disallow. And I have mentioned it, depreciation, which is replaced by capital allowance. And we talk of fines and penalty. If the business organization runs foul of fines and penalty, we may not accept it because we don't encourage anybody to violate any law. And also political contributions. People usually return the fact that the business donated certain amounts so huge to political parties. We don't usually allow it because it is not wholly and not exclusively expenses incurred for the business. Also, when we have excessive entertainment, if it is excessive, we don't usually take it as a liable deduction. And I think I can move forward to pay as you earn. Have you gotten my slide? You haven't.
Yes, sir. I think we have, sir.
Okay.
Yes, sir.
Oh, thank you very much. So, pay as you earn eligible deductions. You know, section, is it not section 28 that's that's prescribed the eligible deduction for pay as you earn. But before I talk about that, I think from my experience, most pay as you earn issues arise from 5 areas. Misclassification of income, that is salary structured as non-taxable allowance or consultancy fee. 2, underreporting of benefit in kind, cars, accommodation, utilities not properly valued. And number 3, wrong residency allocation, employees living in Oyo, taxed elsewhere. 4, improper deduction, claims without documentation will always usually not be admitted by ORS. And we talk of poor record keeping. If you are coming up with a business coming up with no payroll schedule, no supporting evidence, usually we do not allow it. Let me be clear. Most disputes are not about the law; they are about evidence and interpretation. And the next slide. Okay, sorry. Please go back once. Yes, thank you very much. For any deduction to be qualified. No, slide 4, please. Yes. For pension, there must be evidence of deduction and remittance. And for NHIS, there must also be evidence of deduction and remittance. Ditto for NHF and for assurance premium. Very many people sometimes will come up that they want to claim with third-party vehicle insurance premium paid. And as we all know, the law does not allow it. It is only the life assurance premium that is acceptable. And we talk of rent relief. I can recall when the chairman of the district was making his remark, he talked that he was discussing with a friend that is rent relief practicable. But as tax authority, we are telling you that it is indeed very much practicable. It's just that all these eligible deductions are made by government to influence economic behavior. Rent relief is for somebody who is very poor. and it's not just for everybody. If somebody is so poor that he doesn't have a house of his own, then the relief is for the person. But to be eligible, we must have the evidence, that is the receipt and the withholding tax deducted from such rent. And we talk of interest on owner occupiers, interest on loan taking for owners occupier building development. And the evidence to support that, at least in our own perspective, is the receipt. Sorry. Is the duly signed, duly executed agreement of mortgage, so that not just everybody will be coming with just anything that they want to claim withholding tax. I mean, that they want to claim interest on mortgage. And very many people will claim that they borrow from friends, they borrow from family, and there will be no document to show for it. So in our case, it must be evident with the receipts and, with the duly executed agreement. Let's move to slide 5, computation template. Please move the slide. We all know that chargeable income from 0 to 800,000 naira is not taxable in the new tax regime. And the next 22,200,000 naira at 15%, and so on until we have chargeable income above 50 million naira, which is chargeable at the rate of 25%. And if anybody has withholding tax that has been suffered, and if we have in the income declared from all sources, if we have that withholding tax, I mean, we have that income gross of withholding tax in the interest, I mean, the income declared, then we allow that withholding tax to reduce the total tax payable. But if we don't have the income as part of the income from all sources that were declared, we won't allow it, because sometimes some people, there are withholding tax that are final tax, like interest deposit withholding tax and frank investment income, withholding tax on frank investment income. People will not declare that income, and they will come up to say that they want to claim, they want to use it to reduce their tax payable. So let's move to the next slide. I just want to be exceptional because I'm talking to ICANN members, and I know very many of you know better than even the tax administrator. And but there are certain areas where we do usually have disagreement. And I will refer you to Regulation 10 of withholding deduction at source withholding regulation. And let me address this major area of confusion. Withholding tax exemption are not often misunderstood. When we audit a taxpayer, the question is simple. Under which paragraph of Regulation 10 did you rely on not deducting? And the answer must be supported with document. If not, it becomes a failure to deduct, and the sanction will apply. And even where withholding tax is not deducted, the income is still taxable under PIT or CIT. And these are the most confused area. The manufacturer claim. People who distribute products sometimes for tax avoidance or evasion, whichever is applicable, want to claim that withholding tax is not deductible. Meanwhile, they will not be the one that manufactured the goods. But when we search and confirm the manufacturer of the goods, we disallow the fact that the withholding tax is not deducted, and we apply the law. We equally apply the sanction. And out-of-pocket expenses as well. If you want to claim that you did not deduct withholding tax because it is an out-of-pocket expenses and you are claiming 2.5 million naira. It's 2.5 million naira and above out-of-pocket expenses. These are misused area that we try to curb. And we talk of across-the-counter transactions. If we can confirm that...
Let's begin to round up. Let's begin to round up.
All right. If you can confirm that the supplier is a vendor already known to the business, then we disallow it. And as well, the exempt input claim. Let me sound a general significant point. In any tax administration, evidence is everything. ORS operates on IPSAS accrual basis. Direct assessment is recognized when an assessment becomes final and conclusive. Pay as you earn is also recognized when income is earned, and withholding tax is recognized when duty to deduct arises. And unremitted taxes become government assets, which means interest applies and penalty also apply. Let me now introduce, let's go to slide 7. Let me introduce you to our self-service platform. This is our self-service platform. It's just like a Tax Pro Max platform. You can, right now we are profiling with state team because Nigeria, Joint Tax Board has not integrate us with the Tax ID API. And when that is done, we will start, we will incorporate it and to exchange STIN with Tax ID. But now, if you want to be profiled as a business, then we provide you with STIN and access to your personal page where you file returns, where you can you file returns, then you make payments online, you can verify payment, you can verify assessment, and you can also verify tax clearance certificate. And let me, okay, the next slide is on dispute resolution. Aside tax ombuds, and let's go to next slide. I'm almost done. We are well accustomed with tax ombud and tax appeal tribunal, but Oyo State Internal Revenue Service also have an internal mechanism to resolve disputes. And it is internal. When you have any issue, you can obtain our form, fill it, and send it to us. We will invite you for interaction, and any form of undesirable complaint will be trashed. Let me speak directly to you as professional. You are no longer just advisors. You are the first line of tax administration, and your responsibility now includes correct classification of income, accurate pay computation, ensuring proper deduction, maintaining documentation, and advising clients correctly. Before, when issue arise, the question would be, was professional advice properly applied? ORS is not looking to create adversarial relationship. We are proposing a partnership built on clear interpretation, consistent application, early engagement, faster dispute resolution, because when you apply the rules correctly and we apply them consistently, we achieve better compliance, faster case closure, and reduce disputes. And let me close with this thought. The future of tax administration is not just enforcement, it is certainty. When taxpayers understand the rules and trust that those rules will be applied consistently, compliance improves naturally, and that is the direction Oyo State Internal Revenue Service is taking. And we cannot do it without you. ICANN members are not just stakeholders. You are partners in building a transparent and effective tax system. Thank you so much for listening.
Thank you very much for that wonderful paper presentation. You have represented the chairman very well. We are not disappointed in you. We are impressed. We know the stuff you are made of. Congratulations for delivering a well thought out paper. In the absence of any other paper, I want to round up this session, on or before 6:18. or 6:20 at max. I only want to ask the first, second, and third paper presenter one question each, and I want them to answer in less than 1 minute. Then I close the session. Mr. Adesomi Adejare, are you there? Mr. Adejare, are you there? Hello? Mr. Adejare, are you there? Dr. Kende, are you there?
I'm there. I'm much available. Yeah.
Okay, thank you very much. Please, I want you to enlighten us on the e-invoicing.
Okay.
Then, just e-invoicing. The top paper presenter, Mr. Jones, Oluwarotimi, are you there?
Yes, sir.
You talk about presumptive tax.
Yes, sir.
You talk about presumptive tax and said that the minister will come out with the regulation. Is the regulation going to be discussed by the stakeholders, or is going to be imposed on them just like that? So I'm speaking as a consultant, and I've raised this question over time that the spokesperson of Federal Revenue Service have always been telling members of the public that the people in the informal sector are not the target people. So with that, it's as if you are exempting them from payment of taxes. But that's not the concept of the new tax laws. They are supposed to pay. Now you are talking about presumptive tax and regulations. Maybe you are not going to categorize them, category A, category B, category C, or A about. How are you going to do it? And is it going to be discussed? Or you are going to impose it on them? So please just respond within 1 minute. Is Mr. Adesomi there?
Okay, you might moderate.
Okay, if Mr. Adesomi is not there, let me ask Mr. Dr. Kennedy this question. Mr. Adesomi mentioned the fact that the pioneer status were abused in the past, which made the new tax policy to streamline that profession. Would that not stifle creativity? Because
Yes,
okay, Adesomi,
yes, sir.
on the issue of the pioneer status, you said because it was abused in the past, it has not been streamlined. I said, would that not stifle creativity?
No, okay.
Just let me continue.
Okay, so
In China,
okay, sir.
In China and some other parts of the world, they will tell you, you don't have to sit down and be creative 100%. All what you need to do is to look at what somebody has been doing and improve on it, and that forms your creativity. So if you are now you now want to regulate it and regulate it in such a way that only businesses or entrepreneurs that are genuinely creative will be allowed, would that not stifle creativity? That's my question. So I want you to answer 1 minute, please. Starting from
Mr. This is my plan that will come together. So generally, the pioneer. So why there is abuse in pioneer? We need to understand one thing about the pioneer. The pioneer is supposed to encourage and improve certain sector of the economy. So it's not supposed to be a blanket. So it's supposed to be in actual sense that it's supposed to be like a rotation. So let's say the government wants to improve, let's call it manufacturing now. They may give pioneer for a certain period in manufacturing, and then when that economic improvement has been achieved, they may rotate it to another sector of the economy. So that's the whole idea of pioneer. Yes, some people abused it, but what has happened with pioneer is that it did not exactly stop. It's only metamorphosed into something bigger, the economic development investment, which is EDI. And EDI now has a specific sector. There's a particular investment you must do. There's a particular revenue you are expected. You are supposed to reinvest your revenue as well. So that's everything. So the whole idea is that the industry they want to improve and develop, the money stays within that sector and it is actually improved such that they achieve the goal. So that's the whole idea of what has happened. So not like they are going to stifle the economy or they are going to stifle creativity. In fact, what they're doing is to improve creativity because you are forced to retain the revenue generated in that particular sector and ensure development. So in my honest view, is not to stifle, but to encourage. So when you want to go for pioneer, you did know that you must achieve the goal. If you are looking for other aspects, you can go. That's why they said, oh, for general economy, everybody below the 100 million threshold can always get low tax payments. That's the way of encouraging creativity. So go and do something new. If you get that revenue and it's below 100 million, we admit that don't pay any taxes on it, just file your returns. If you then take your revenue threshold, we take it to the next level and you want this EDI, then do the right thing, get the certificate, get the appointment, then get into the EDI. So that's the whole concept of this pioneer that's metamorphosed into EDI.
Thank you very much. Dr. Kennedy.
Okay, thank you very much, Dr. Oyebade. E-invoicing, what it's all about is just an electronic invoice for all the companies in Nigeria. At the earlier stage in 2024, November to 2025, all companies with a turnover of 5 billion and above, they were expected to onboard on merchant buyer solution. That is the platform that all the large taxpayers are expected to onboarding themselves on that, so that the invoice being issued instead of manual, it becomes electronic. It is integrated into the accounting software of that company. There are stakeholders that are involved in that process. Just like I mentioned too, that all companies in Nigeria, but now by March this year, we'll see our medium taxpayers, start beginning of their own onboarding. By January next year, they will start that of emerging taxpayers, taxpayers. But the essence of e-invoicing is one of the objectives is to reduce this continual audit exercise. It will reduce the level of audit by auditors with the company. But e-invoicing is all about electronic invoice, which everybody is expected to onboarding on merchant buyer platform. Thank you, sir.
Thank you very much, Dr. Tuzi. Mr. Jones.
Thank you, Doctor. Dr. Oyebade, thank you very much. Your question has to do with if the ministers will discuss it, make it all inclusive and the likes. The Nigerian Tax Act, that section clearly stated that the minister on the advice of the Joint Revenue Board will issue a regulation. So that regulation is exclusively for ministers to issue, and the term and condition to carry it out is meant for the minister. But I want us to just know this fact that this is an informal sector. They don't keep record adequately. Now to ascertain their income is becoming difficult. So if minister is coming up with a modality to get them into the tax net, because they will be paying tax, they call it a presumptive tax regime. They will be paying tax, no matter how minimal it is. Then we have their team. So if there is a way we can carry out other diligent research on them to know whether what they even claim to be, because by the time you bring them to tax net, There may be need for them to have a consultant that will help them prepare their account and the likes. With that, with that, they'll be able to add value to revenue generation. But the modality it will take for now, we don't know. We are waiting for the minister to give out the modality, the term and condition. And now to believe if it will involve everybody, stakeholders, it's possible, but I cannot speak for the minister for now. Thank you very much, sir.
Thank you very much. This is just an opinion by Mr. Ajaguna Mavi. Said the Oyo State Internal Revenue Service Chairman, representative position of misuse claim is not right in disallowing one out-of-pocket expenses, citing 2.5 million naira. Said two, across-counter transaction. I don't agree with the representative of Oyo State Internal Revenue Service Chairman. Thank you. That's the opinion of Mr. Ajaguno. Finally, let me thank everybody for participating. Throughout the program, we still have 94 people, on the line, suggesting that we have a very good participation. I want to thank you, and I want to thank all the people presenters. I now yield the floor to the rapporteur. Thank you very much.
Thank you, sir.
Ademola.
Yes, sir.
Mrs. Omikori.
Thank you, sir.
Okay.
For the wonderful session. But I don't know, unfortunately, the audience, I don't know if we can just permit one or two questions so that
I can't see any hand up.
we not just.
I can't see any hand up.
So, okay. I actually want to ask the Oyo State speaker that when are they going to domesticate the new tax law?
Cannot say anything.
Because there are some states that have started domesticating it.
That is wrong.
But I don't know if Oyo State have done that. I actually want to ask the question.
Thank you very much, Mr. Sunday. Oyo State is one of the states in Nigeria, and the new tax reform law is scheduled to commence by January 1, 2026. Oyo State has domesticated it. We have started. Not minding the fact that when you are transitioning from certain legacy practice to another, this particular tax reform law is not is transformational. It is not incremental, and not minding the fact that we have been preparing since last year. But still, we are onboarding certain processes that will align with the law. And I can tell you for free that for those that are practicable for now, we have started. Thank you.
Thank you so much, sir. And finally, is the issue of individual filing, because it is compulsory that we should have a self-filing. And failure to do that, it also attracts penalty. So I'm just looking at the informal sector, all those individual traders, and if they fail in filing, will there be any penalty? Because going by the law, failure in filing brings about a penalty. So what is the idea, the plan for all these informal sectors that may not have the capacity or the technical know-how to do their filing? Thank you, sir.
Yeah, thank you once again. I think I discussed the issue of informal sector the other time, that one of the four mechanisms for personal income tax collection is presumptive tax for people of the informal sector. And it's just the fact that we have a rate for certain categories of traders, artisans, and so on and so forth, who are operating in the informal sector. One major thing that distinguishes informal sector operators from formal is just that we cannot ascertain their income like people who ride Okada, the organizers, the roadside mechanic, who doesn't keep records. But we are onboarding the process. And I think the other times Mr. Taiwo Yedele was talking, he was giving us an idea. I watched the clips. The tax ID, the phone number, everything, we work along one another to ensure that nobody is left. But you know, we are just starting. We don't just start and complete the process and claim that we have started and achieving. But with passages of time, we get there, and everybody in Nigeria, including those who are in the formal sector, except they have chargeable income that is below 800,000 naira that is exempt from tax. We get everybody, you know, with technology. And we also note that anybody who, there are some people in the informal sectors, they control millions of naira, but they cannot do without having bank accounts to operate their business. If they are growing to that, if the business has expanded to having several millions of naira, even if they don't register with CAC and FRS, NRS do not know them, with passages of time, bank data that they send to us, we expose them, and we are going to bring them to TaxNet, and that will continue.
Thank you very much. The session is closed. Mr. Ademola, please, let's give room for the Rapporteur General report.
I'm not sure if he's on the call.
I'm on the call. Hello.
Okay, thank
I'm
you.
on the call.
So you have the floor. Thank you, sir.
Also, the chairman of the session, the district chairman, and the speakers, all protocols are duly observed. I have the honor of presenting the summary of today's webinar organized by Interofficial Government of Nigeria by the Andrew Society on the theme Navigating the New Nigeria Tax Reform Implication, Compliance, and Practical Insights Overview. The webinar provided a multi-dimensional analysis of Nigeria tax reform direction, examining regulatory expectation, compliance, obligation, emerging tax areas, and practical implications for business and professionals. The session featured perspectives from regulators, private sector tax experts, and policy analysts, making the conversation balanced and forward-looking. The major highlights of the webinar, we have number one, compliance and enforcement. Speakers emphasized that the new reform signal stricter enforcement, improve monitoring system, and reduce tolerance for non-compliance. Technology and data integration are strengthening tax administration, making accuracy and timely filing non-negotiable. Number two, policy and professional responsibility. Policy and professional responsibility. The reforms aim to... Hello? Hello?
Yes, we can hear you. Please continue.
The reforms aim to broaden the tax base and transparency and improve revenue sustainability. For professionals, this means transitioning from routine compliance roles to strategic advisory function while maintaining high ethical standards. Number three, emerging and evolving tax areas. Discussion highlighted development in digital taxation, cross-border transaction, and sector-specific regulatory adjustments. The tax system is aligning with modern economic reality. Number four, SMEs and tax planning. SMEs must improve record keeping, documentation, and reporting discipline. However, the reform also creates opportunity for structured tax planning and lawful optimization. Number five, the pay as you earn and personal income tax. Accurate computation and prompt remittance were strongly emphasized. Employers must strengthen payroll control to avoid penalties and reputational exposure. The key takeaways across all presentations, the dominant theme were digitalization of tax administration, stronger compliance culture, increased accountability, continual professional education. In conclusion, the Nigerian tax landscape is undergoing structural transformation. As ICA members and finance professionals, our role is to remain informed, compliant, and advisory-driven in supporting organizations through this transition. I sincerely appreciate the organizers, speakers, and participants for an enlightening and impactful session. Thank you very much. Over to the chairman of the session. I really appreciate everyone. Thank you.
Thank you very much. Mr. Ademola.
Yes, sir. Yes, sir.
Before you continue,
okay,
it will be necessary for you to introduce the past chairman of the district society here present, and also chairman of other district societies here.
Thank you. Thank you very much, sir. Good evening, everyone. I have the pleasure of introducing the past district chairman of Ibadan and district society of ICANN on this call. The first person that I would want to introduce, or I would want to let people know, is the chairman of session, who is Dr. Prince Oyebade Oyedepo, FCAJP. Is one of our revered past chairmen in the district. And we also have with us a darling sister, the 23rd chairman of the district, and that is Dr. Mrs. Temitope Babajide, SCA. Thank you very much, ma'am, for joining us on this call. I also recognize the 24th
You're most welcome.
chairman.
Good evening, everyone.
Thank you very
Good evening,
much, ma'am.
Chairman.
I also recognize the presence of the 24th chairman of the district. That's our immediate past chairman, Alhaji Babatunde Kilani, SCA. Thank you very much, sir, for joining us on this call. And then at a time, I noticed that the chairman, the maiden chairman of Obiopo and District Society, was with us, but I'm not too sure if he's still with us. And that is Dr. Chioma Ojuku, SCA. I chatted with her. She said that she was going to leave us by 6 to attend a mass. But I would want to just recognize and appreciate her in absentia. Thank you very much. God bless you all. We appreciate you. We pray the Lord Almighty will continually uphold you all in Jesus' name. Thank you very much.
Thank you very much, my chairman. And without wasting our time, the next is to appreciate all our paper presenters. Of course, they have done so brilliantly. So I have the honor to call on our vice chairman, Mrs. Palome Olabimpe Ajayi, FCA, to do justice to this cause. Thank you, ma'am.
Hello. The 25th chairman of Ibadan District Society of ICANN, the chairman of the section, and every other revered past chairman that are on this call, our dear speakers and dear professional colleagues, I want to say good evening all. We want to first of all appreciate the Almighty God, the giver of life, the one that made it possible for us to plan for today and making it to be a success. Say may his name continually be praised. I have the honor of appreciating, I don't know, the 25th chair. Am I to appreciate all our speakers, or because I have the flag as well to present? Am I to appreciate all of them? And different people will be presenting the plaque. I await further directives on that. But let me appreciate all our speakers. Okay. I want to appreciate all our speakers for finding time out of their busy schedule to give out of their weight of knowledge to enrich us this evening. We are sincerely grateful, and we know that all our members are actually appreciative of all the paper presentation, because we are able to add more to our knowledge on the new tax reform and the implementation. We say, may the good Lord continue to be with you all. And I also have the honor to specially present this digital flag to our all the time resource persons, because I know there is no, at least in the recent time, there is no chairmanship here that we've not called on Dr. Dusi to actually speak on one topic or the other. And he has always been making himself available. Even physically, he will always make himself available. I want to
Thank
sincerely
you very much.
appreciate your humility, your love, your love for what you know how to do best. Thank you so much. And on behalf of Ibadan District Society of ICANN, the Trailblazer Districts, with our deepest appreciation in honor of Dr. Kende Odusi, FCA, we present this award of recognition and appreciation of your outstanding contribution as facilitator speaker at the Ibadan and District Society webinar section titled Navigating the Nigerian Tax Reform, Implication, Compliance, and Practical Insights. Aired on today, Sunday, February 22, 2026. And we say thank you, sir. Duly signed by Mrs. Olufumi Omishori, FCA, the district chairman. Thank you, and God bless you.
Thank you, man. Thank you, all members. Well appreciated. Thank you.
Thank you, sir.
Yes, sir. We actually
So it will surely be delivered to you.
Physical copy. Yes.
So thank you very much. I would want to call Mr. Oluwarotimi Kuti to kindly appreciate Mr. John Oluwarotimi.
Good evening, our chairman of session, Dr. Prince Bade Oyedepo, FCA JP. Thank you for making yourself available today to coordinate this wonderful webinar tagged Navigating the New Nigerian Tax Reforms, Implications, Compliance, and Practical Insights. And for Mr. Jones Oluwarotimi FCA, what a coincidence. My name is Oluwarotimi Kuti, and I'm making these presentations for my namesake. It is indeed a double honor for me. We are grateful, to you as a person. Despite your busy schedule, you have created time and prepared this wonderful and insightful presentation this day to benefit our members, professional colleagues. My prayer is that the Lord will continue to bless and prosper you. As you give out, Almighty God will be multiplying you. This award is in recognition and appreciation of your outstanding contribution today as a facilitator at the Ibadan and District Society webinar. We are the Trailblazer District, and we appreciate God for our chairman, Mrs. Omishori, and the distinguished committee member, Education and Training, for putting this together. I pray that this district will continue to work stronger and stronger. And both members tonight, we have been blessed We appreciate your time. We appreciate your expertise and professionalism you have shared with us. Mr. Oluwarotimi Jones, the Lord of heaven will continue to bless and prosper you and all that you do.
Amen.
Like it has been said before, you will get this flag very soon. We are just presenting the digital in appreciation and as a formality. This new week and this new year, the Lord will break new ground for you and your colleague that also came to support us and make themselves available. My prayer is that the Lord will bless you all. Thank you. God bless you.
I appreciate you, sir, for the award, for the plaque, and I appreciate the entire district for this recognition. Thank you very much, and God bless you all.
Thank you, sir.
Okay, the next flag.
Okay. Yeah.
Can we see the next flag? Okay, so the next flag is to Mr. Adesanmi Adejare. I would want to call on Mrs. Rachel Ojelade to kindly present this flag to Mr. Adesanmi Adejare, ACA. Mrs. Rachel Ojelade.
Hello?
Yes, please kindly present the flag to Mr. Adesanmi Adejare, ACA.
All right, I want to be sure that I'm being heard. Good evening, the 25th chairman of Ibadan District Society, our own Mrs. Olowafunmilayo Omishore, FCA. Thank you for this program. And I also appreciate the chairman of the session, our Reverend past chairman and past ICANN Council, our own Dr. Oyebade Oyedepo, FCA JP. I also recognize all our revered past chairmen on this call and the technical committee for the job well done. So I want to go straight to the business of the day by making this presentation to our facilitator, our own Mr. Adesanmi Adejare, ACA, in appreciation of his presentation today, acting as a facilitator at the Ibadan District Society webinar, tag Navigating the New Nigeria Tax Reform Implications, Compliance, and Practical Insights today, 25th February 2026. We really appreciate you. We thank you for your time. We thank you for the presentation. I want to believe that everyone here has really been blessed. So we appreciate you, sir. I want to believe that when next we call on you, you will make yourself available, even to keep on enlightening us. Thank you so much for your time, and thank you for coming. So please accept this as a token of our love from Ibadan District Society, while the physical presentation will be presented to you later. Thank you, sir.
Thank you so much, everyone. Yeah.
Thank you very much, sir. Okay, so the next one goes to Mr. Adebowale Awakan, who is ably represented by Mr. Lukman Mukaila. If I hope I'm not mistaken, I would ask Dr. Temitope Babajide, SCA, to kindly present this plaque to him. Thank you very much, sir.
Very much, 25th chairman, Mrs. Olufunmilayo, FCA. Good evening, everyone. So, standing on the already established protocols, I want to appreciate Mr. Adebowale Akwon, ably represented by Mr. Lukman Mustafa, Actually, I'm not surprised. Mr. Mustafa has been someone that we've been on the same platform all the while together, and I know the kind of stuff he's made of. So I want to appreciate you for the presentation. Likewise, the presentation from every other member, every other facilitator. So in honor of that which you have done for us this evening, and on behalf of the Badantry Society, which is the Trailblazer District, with our deepest appreciation, we appreciate Mr. Lukman Mustafa for the presentation done us this evening. And we extend this to Mr. Adebowale Awakon. And it is with this award of recognition and appreciation of your resounding contribution, outstanding one as a facilitator at the ICANN Ibadan Society webinar session titled Navigating the New Nigerian Tax Reforms, Implications, Compliance, and Practical Insights, which took place today, Sunday, February 22nd, 2026. Thank you, sir. And this has been given under the seal and honor of the 25th chairman of the District Society in person of Mrs. Olufumlayo Omishori, FCA. Thank you so much. God bless you. And I believe you can count on you because this is like the second or third time you'll be giving us a lecture, Mr. Mustafa. So I know we can always count on you. Anytime we call on you, you'll be readily available. We are together. Thank you so much and God bless you, sir.
Yeah, let me send my appreciation on behalf of the Executive Chairman of State Internal Revenue Service. But, you know, we are taxmen and it's not unusual. I would have loved to award penalty and interest for the chairman of this district for misspelling my name, but I will pay for it. I will pay on their behalf. So on this note, we so much thank you. We appreciate you. We appreciate you in association with Oyo State Internal Revenue Service. Whenever you call us again, we will be ready to attend by the special grace of God. We appreciate Ibadan District Society and we say long live ICANN, long live Nigeria. Thank you very much.
Thank you so much, Mr. Mustafa.
I'm so sorry, sir. I'm ready to pay the fine. Thank you very much, sir.
I will pay on your behalf. Don't worry, sir.
Okay. Okay, thank you very much. So who is next? Mr. Joel Babatunde. Okay. So I would want to call on the SWAN representative of ICANN Ibadan District Society in the person of Dr. Mrs. Shiliola Akimbowale to kindly present this to Mr. Joel Babatunde, SC. Thank you very much. Dr. Mrs. Shiliola Akimbowale. Dr. Mrs. Shiliola Akimbowale, are you with us? Dr. Mrs. Shiliola Akimbowale. I think. Dr. Mrs. Shiliola Akimbowale, are you with us? Okay. I would want to call on Alhaji Babatunde Kilani to kindly give this plaque to him. Alhaji Babatunde Kilani. Okay. I think he has left too as well. Okay, please, Oluranti Grace Olubusoye. Miss Grace Olubusoye. Miss Grace Olubusoye. Mrs. Olubusoye.
Yes, ma.
Please kindly do this honor by presenting this plaque to Mr. Joel Babatunde SCA.
Okay, ma. On behalf of the committee and the 25th chairman, we want to appreciate the speaker for the wonderful presentation. Thank you for the opportunity to tap from your wealth of experience. We appreciate you so much for the wonderful presentation. And on behalf of the district, we present to you this plaque for your wonderful presentation. I'm finding it difficult to read what we have on the plaque. So, but we want to appreciate you, sir. Thank you so much for that wonderful presentation on navigating the new Nigerian tax reform, its implications, compliance, and practical insight. Thank you so much. We are grateful, sir.
Thank you very much, Ma.
Yes, ma.
Okay, so I'm going to do the presentation to my mentor, the one we call 10-in-1 in Ibadan District Society of ICANN, because Dr. Prince Oyebadio Oyedepo, FCAJP, has been there for us, even as members of the district, and even as a revert past district chairman. Anytime we call on him, he's always ready to give his support. He's always ready even to provide us insights on how to move the district forward. And you will well agree with me that he has done brilliantly well today as how he had coordinated this webinar. I pray that the Lord Almighty would continually increase your wealth of experience, sir. I'm grateful, thankful that the committee actually called on you to anchor this program, and you accepted, to do this. God bless you, sir. So on behalf of Team 2025, that's the ESCO of Ibadan District Society and the entire members of Ibadan District Society, I want to deeply appreciate you, sir, Dr. Prince Oyebadio Oyedepo, FCAJP, for your brilliant performance today as the chairman of session at this webinar tagged Navigating the New Nigerian Tax Reforms, Implications, Compliance, and Practical Insights. Given this day, Sunday, February 22, 2026. Thank you very much, sir. And I know that anytime we call on you, you would always answer us. God bless you. We appreciate you abundantly.
Amen.
Thank you very much.
Thank you very much. Thank you very much, Chairman, and other school members and members of the district for the opportunity. We are glad that you are keeping the flag flying. May the good Lord continue to be with you and bless you. Thank you very much. Appreciate it.
Thank you very much, sir. Mr. Sunday, so let's call it a day.
All right. Thank you so much. We want to appreciate everyone, especially our facilitators. They have done so very well. More than 2 hours they have been on the call. We have a lot of people that attended this program. We about almost 2,000 participants registered for the program. We hear it live on YouTube, and many people joined the YouTube session. So you have actually, the speaker have actually reached a larger audience through this medium. And of course, those knowledge, those lecture we got must have imparted a lot of us. Thank you so much. So at this junction, we are going to draw the curtain of this program. And I want to believe next time, if we invite you, you also be there for us. I also take our permission, the speakers, the facilitator, to distribute the slide of this program. If you permit me, then I will assure the participants that they will, all the registered participants, that they will get a copy of both the recorded version of this webinar and of course the slide of this webinar. And finally, the certificates. There are people that are interested in getting certificates of attendance. So this week, I mean, today is Sunday. Yeah, this week, the certificate will be available for as many that have made payment. And if you pay to Ibadan and District Society, we have the account number, Fidelity Bank, and send your evidence. Tell us whether you want a soft copy or the hard copy of the certificate. We'll get it in touch with you. Thank you, ladies and gentlemen. And at this junction, we want to draw the curtain of the program by having the closing prayer. I will call on Mr. Salimon to give us the closing prayer. Thank you.
Thank you, my chairman. All praises is due to Allah, the Lord of the world. Oh Allah, we thank you for the success of this webinar and for the knowledge shared today. May God bless the organizer, the speakers, and all participants. May God grant us the beneficial knowledge, sound understanding, and the wisdom to apply what you have learned with integrity and professionalism. May God guide us to uphold justice, transparency, and ethical standard in our practice.
Amen.
May God and strong progress. May God bless us with best of you and prosperity. May God protect us as we depart and bless our family. We seek the blessing of Allah on every one of us.
Amen.
Al-Fatiha. Bismillahirrahmanirrahim. Alhamdulillah Rabbil Alameen. Ar-Rahmanir Rahim. Malikin. Kabul wa Nasta'in. Idina Suratul Mustaqim. Suratul Azim Ta'alim. Karam Gudul Alamin. Amen. Thank you very much and God bless us.
Amen.
Amen. Thank you.
Bye.
Let's just have the
national anthem and the icon item. Then we close the program for everybody.
Well done, oh, my technical. God bless you.
The most dangerous.
Technical.
Child
As my chairman.
standing strong in our morning. Let's go back into the present. The shadow of the standing strong in our morning. Building our life together. We cover from the Father. Silence to our festival of sacrifice. Through all ages be sustained.
Thank you, everyone. The meeting has come to an end. Thank you.
Thank you, sir. Good night.
Good night. Good night.
Thank you. Good night.
Look at the live too.
But I would want to just recognize and appreciate her in absentia. Thank you very much. God bless God. We appreciate you. And pray the Lord Almighty will hold you on in Jesus' name. Thank you very much.
Thank you, Chairperson.
Thank you very much, myself.